Good afternoon, this is Melissa with the StockSwoosh.com, and today I thought I would do a market review. Happy holidays, everyone. The market is closed tomorrow, so I thought this would be a good day to do another market review just to kind of recap for several reasons. One, getting ready for next week, start to a new week, start to a new month, start to a new quarter. Well, April will start the second quarter of 2013. Boy, time really flies, doesn't it? It's hard to believe it's already second quarter 2013, and yet it is. So I wanted to go over the market today to just reaffirm my original market call that I've had now for the last few times, which is that we are bullish. We are bullish in the Qs. I know people thought that this was toppy. I disagreed with those people. And the way that we've traded the last 2 days confirms what I've had as my bias, which is that we're going to carry through. We are not at a top. This is not a top. We're going to break over 69, which is this area here, and we probably could do it Monday morning. I wouldn't be surprised if we gapped up here over here Monday morning. So we failed on a daily sell setup yesterday. In fact, when we opened down here, I said we're not going anywhere with this. Don't think anything. We're going anywhere with this. We're going to rally. I didn't know we'd power trend all day until we started rallying. But as soon as we started rallying, I said we're going to power trend all day, and we actually did. And I'll look at a 15-minute chart of that in a minute. Then we gapped up today, and I said, boy, we might actually break over 69 today. But day before the holiday, market volume's light. We didn't have the energy to do it, but we're holding beautifully. Actually, not going down, which we're not going down. So this was never a top. Why is this not a top? Tops don't have a tail every second, every bar. Tail, 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 big tail, big tail, tail, tail. This isn't a top. This is a base. It's a base because it's a flat area, and beneath it is hanging these tails, these squiggly tails hanging in the wind. Okay? Once the base gets broken over, we're lifting up higher. I think we go up here to 69.50, possibly 60, 69.80, 69.90, 70, and I do think we are most likely going to break over this area here, 70, 70, 54, 70, 58, which will rally through and be not all-time highs for the market, no way, but will be newer highs for the Qs than they've had for quite some time. And then the next place to go is 72, I think was the number I was looking at. 72 is probably the next spot. So I don't know if this means we're going to run bullish all year into 2013 once we break over this area here and over this area here, but it is possible if we do that. If we are going to come in, we would break over here and then come up here and then hold and come in. But you know what? The way we've been trading since January, to me, I feel that we are moving higher in a steady, steady pace. Sloppy. It's been sloppy, sloppy, choppy, chop, chop, chop. But the way we've been moving higher here, steady, 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 breakout. We could be steady again, choppy and steady, but then break out again. I mean, the way we're doing it is a formation that makes me think that we could end up having a run up this year. Well, we'll have to see how we act at this area here. And all along, I'll keep checking it, keep reading it, keep checking it, keep doing it real time. You know, no one likes to be bearish more than me. However, I've got to call the market as I see it. I have to read the charts accurately. That's the only way I can stay sharp as a trader. When I was trading in February, and when I was trading in January, the market was heavy. This was an absolute mess. This wasn't a bottom. It wasn't a top. It wasn't anything. It was just a mess in January. It was really a mess. And February, even though we came up a little bit here, I felt we were going to come in. And we did. We came in hard here and here, and then this bar here, we really came in. And I thought we'd actually go back down and retest for sure 65.70. We never did it. We couldn't even get there. We lifted off from here, failed on this daily sell setup here, gapped up here, and it failed in every daily sell setup since. So the market's holding. It's holding. And this wasn't a great gap up. So the fact that we traded under it isn't that significant. It's really not. The trend here is neutral slash bullish. If I had to pick a direction, I'd say bullish, but it's neutral slash bullish. It's really neutral slash bullish. And this heaviness that I felt in February does not exist anymore in the month of March. And I've been saying that. And that's part of the reason why I've also been calling the market that we're going to break over that area and continue. Because the market has been light, has been lifting. Every time we gap down, we get a lift. Every time we try to come in, we get a lift. We get a lift, we carry through, we get buying is coming in. Now, it might not be huge buying to push everybody up, but it's something. Something's making these tails. I can tell you that. All right. And the day of this big bar here, this was actually a big red bar that didn't even stay red and got bought into it and retraced more than 55% of the bar. The market during the month of February was heavy. I could tell when I was trading it. And the Qs in the month of March have not been heavy. They've been lifting. Every time they gap down, it's been failing. It's been lifting. So we'll look at yesterday. This gap down yesterday failed rather quickly. Really rather quickly. In fact, as soon as it didn't carry through here into 10 to 10.15, it pushed up. Actually, you could tell that it was going to fail right here at 9:45, to be honest with you. Because as soon as we gapped down, we flipped up and broke a new high right away in the first 30 minutes of the day. And then this bar here didn't mean anything, this red bar. And we carried off and lifted. And then I thought we'd do a 15-minute sell setup here, come down, and then do a buy setup. But then we triggered on it and quickly failed and rallied again. And then we came in here, and then we did the buy setup here, 115 into 130 reversal time, and carried through. We really power trended all day yesterday. So there was no pull-in really until 115, 130. And it was a slight one at best. This is not a top. This isn't how a top looks like. Tops look toppy. Bases look basey. Why do I look at this as a base? I look at this as a base because, first of all, there's a million tails in here. Everything is a tail. Tail, 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 big tail. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. In a conglomeration, tight-knit group of 15 bars, 13 of them have tails. That is not a top. Buying does not come in to toppies, all right? And this is a base. This is a base. And what do you do on a base? You either break above the base or break below the base. But since the base is at the top, the break's going to be up. If the base was at the bottom, the break, and it would be acting like a basey at the bottom with topping tails, and it would be a break under the base. Do you see what I'm saying? This is not a top. You could tell this was a top. 2 bars here. One is a little topping tail. This other one tries to break over. It can't break over it and goes red and immediately comes in. You can tell it's a top. Also, when things start getting squeezed and squeezed and squeezed and squeezed in a basey formation, they tend to be squeezing themselves that they're going to break over it or under it. Tops don't form long, big, straight lines. Tops are quick and they're top, 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 break, top, top, break. Break mean break, and that's the top. Bases and more people and more bars and are basey, and that's not a top then. Does this make any sense? You got to learn how to, you've got to learn how to read charts. Seriously. Sophisticated chart reading and advanced technical analysis is the way to go. To just look at every pivot on this chart and every sell setup and every buy sell setup and everything else under the sun is not the way to read stuff. You got to learn to read stuff really, really, really with a microscope, specifically if you want to read the market. And actually, I think if you can read the market well, you can read anything well. You know, because the market isn't easy to read. I'll give you that for sure. So that we're going to break over this, and then we're going to carry through, and people are going to get squished here. And what's going to happen is because many people thought this was a top, and still probably think this is a top, and they're in denial a little bit here. They're in denial a little bit here today, the last 2 days. What's going to happen is when these people take their shorts off and realize, oops, that wasn't a top, it's going to push it up, and that's going to give the lift then we need probably to get over this. That's what happens then. So the buying will come in to push it off, and then people will take off the people that thought this was a top, which isn't a top, will have to get out. If they're smart, they will get out and realize they made a mistake, and then that will push off here too. and that will push it up. And then that might break us over here. And the longer we take to climb now, the higher I think we're going. You know, January, February, March. Look at this here. We may break over 69 today. We're 8 cents away. It's 2:30 on a Thursday afternoon, though. There's no reason for anybody to be even trading. It's the day before a holiday, the middle of the afternoon. Look at how low the volume is in the market. This is just a day to take it easy, take off, and enjoy the rest of your weekend. So this is Melissa with the StockSwoosh.com. If you are interested in learning how to read charts accurately, if you are interested in my live training room and becoming a member, if you are interested in how to learn how to read these charts or play gaps, which is what I trade, then contact me at melissa@thestockswoosh.com. I actually teach a class on how to trade gaps. And let me add one more thing before I sign off today, everybody. One of the reasons that I am so skillful at reading charts is because I play gaps. First of all, I've spent a lot of time studying charts to get good at trading gaps. But second of all, trading gaps, you know, if you can learn from someone that trades gaps well, which I do, then it helps you to become an astute chart reader. If you can learn how to read gaps correctly, you are going to become a better chart reader. And that's why I think anyone that trades at all in any medium, I don't care if it's equities or non-equities, I don't care what it is. If you can learn how to read gaps, trade gaps and read them, you are going to become a better trader all around. This is all around a more balanced, better trader. You will become better at reading charts. People have a difficult time reading gaps. I don't know why, but they do. And I'm very good at teaching people how to read gaps and trade gaps. And I think this is a reason to take my class, besides trading gaps to make money as day trades or swing trades or core trades. Also, just to become a better chart reader. I mean, I am very good at reading charts because I've looked at a lot of charts, but it's because I taught myself how to read gaps. So I'm looking at so many specific, detailed, intricate things on the chart. And you've got to do that if you want to get good. You've got to have that extra edge if you want to be good at anything. Any kind of trading you do, I don't care what the medium it is, I don't care what the time frame is, you have to be good at reading charts. You must be good at price. The reading of the price. It's the price that I'm reading here, and when I'm reading this price right now, I am saying the market is going to break over $69, run up to 70, come in and wiggle and jiggle and base that again before it breaks over 70.50, or it might just run right up to 70.50 and break over it, or it might run up to 70.50 and base and try to break over that and eventually wiggle and jiggle and break over that and carry through to 72, and after that we'll look further. But the longer we take to make this climb, the bigger the climb it is. And so we'll have to see what 2013 brings. Still going to keep doing the things that I do, the things that I love to do best, which is short bearish gap downs. And even if the market runs out and breaks out to new highs here that it hasn't for a while, it's still going to help my plays. Why? Because everything then that I look and rate on my 26-point rating system that rates high and is gapping down will be pure, true, utter weakness. Talk about having 100% conviction. I'll be all in those plays to make money then on the weakness of those stock symbols, even if the market's rallying up. And it's probably going to help me have a nice, beautiful, fabulous second quarter this year. So let's just see what it turns out to be, because I do think we're going to break over that 69 area next week. So have a wonderful holiday, everybody. It is March 28th. Happy holidays from the Stock Swoosh. Happy holidays from me. My name's Melissa. And if you're interested in more information about my live trading room or my gap class or learning how to read charts, please email me at melissa@thestockswoosh.com. Have a great weekend, everybody.